with respect, do investors have short memories? Because Meta told us in the prior quarter that capital expenditures would be higher in the next fiscal year. They used a different language this time around, which was notably larger in fiscal 26 and 25. But maybe it's what they didn't say. They didn't tell us what top line or bottom line growth directly from AI investments looks like. What's your read?
Well, actually, for Meta, the investments look more riskier than they are for Microsoft or Amazon, who do have these data centers. And they say that if we overinvest, we will have the option to sell this excess capacity. And if you're looking at the market reaction and the mixed reaction there, we also think that the macroeconomic context here is very important. Important in the sense that just before these earnings came out yesterday, the Federal Reserve said that they're not sure that they will be cutting the interest rates by 25 basis points. So I think that that also dampened the mood just before the earnings came in. Looking at the spending, these companies must spend in order to keep up with demand. And Microsoft has been very clear about the fact that they have not been able to catch up with the significantly higher demand. So they must invest. They do have the free cash to invest. And if they do not invest and miss the turn, the AI turn, that would be worse for investors than seeing them over investing. So I think that in the context of the actual growth, these companies must invest, and it doesn't really bother us as long as there are no concerns about oversupply, and this is not the case right now.
Look, Meta said if they have too much compute, they can start selling it to others. So is this an air pocket? Is this just where people buy into weakness? Or is there going to be a significant pullback and questioning of the market writ large if the Fed isn't going to be cutting come December?
Well, I think that the Fed situation could eventually lead to a certain pullback in valuations. But I don't think that that's going to be a bubble pop kind of a market reaction, because these companies must invest now in order to make sure that they don't hit into capacity constraints 1 year, 1.5 years from now. I believe that investors understand that. There is a report showing that, or claiming that the data capacity computing needs will be doubling every 9 to 18 months due to our AI application. So these companies must keep up with that pace. And again, I believe that these spending plans have been almost entirely, put out there. So they have been revised higher, but this is not a surprise coming in right now. Looking at the deals and the strength of the demand that we see in the sector, these companies are out there trying to keep up with the demand. And I believe that, again, as the executives are also saying, not keeping up with the demand or risking to head into capacity constraints is worse than over-investing right now.
What's interesting is, of course, perhaps just to show the amount of spend that was necessary, Meta comes to market with a ginormous $25 billion bond sale. And talk to us about demand across assets for AI-related companies. Sure, we pull back in equities that are near record highs. How is demand looking for the bond side of the equation?
Well, I think the bond side is also looking well, especially right now. We have seen that the bond sales have been quite interesting for these companies. I believe that in the actual environment as well, the bond sales are going to be interesting. Some investors who are not necessarily willing to take the equity risk at the higher valuations, they will be flocking into the bond side of the market. You are not expecting them to move separately. You expect them to move in tandem. But on the bond side, the potential of rise is less, and the risk that you're taking for it is also less. So this is another way of taking exposure, positive exposure to these companies without, however, taking the risk of the equity fluctuations.
Ipek, if I take the earnings statements and call transcripts of all the tech earnings we have so far, run them through ChatGPT and ask ChatGPT to cross-reference for a theme that is not capital expenditures, what would I get? What else do you see that they have common between them?
Well, the capital expenditures are actually rising. I don't know. I haven't asked ChatGPT what he thinks about it. But what we see is that this is growing exponentially, and there is investment worries about that. But if you do not invest today, again, a year and a half from now, you might hurt into bigger capacity constraints. What's happening right now is, if today, for Microsoft, for example, you are not able to catch up with the demand, then tomorrow it's going to be harder, because it will just going divergingly, because the demand is going to be exponential exponentially rising. And that's the main issue. That's why these companies are investing so badly or so highly. And this is, I think, what ChatGPT will tell you, because as AI applications will be up and running, demand for computing is going to rise exponentially. And this is exactly why NVIDIA is also not only concentrating today on the AI applications, but all on the networks and intelligent networks as well, to make sure that even the networks and the pipelines will be able to handle all that data flow down the road.